Hi ma'am, good day. This is Aimelu Felicilda Ugbamin from Bachelor of Science in Accounting and Information System. So for today's video, I am going to discuss my chosen topic, which is all about double taxation. So let me first define what is double taxation. Double taxation occurs when the same taxpayer is taxed twice by the same tax jurisdiction. So it is when income or profits are taxed twice. Proceeding to the elements of double taxation. The first one is a primary element which has the same object, and the second one is a secondary element which has same type of tax, same purpose of tax, same taxing jurisdiction, and same tax period. Moving on to the two types of double taxation. The first one is direct double taxation. It is when all the elements of double taxation exist for both impositions. Direct double taxation happens when two taxes must be imposed on the same taxing authority for the same purpose by the same taxing authority within the same jurisdiction during the same taxing period, and they must be of the same kind of character. So an example for this is the income tax of 10% on monthly sales and the 2% income tax on the annual sales. And for everybody's information, direct double taxation is prohibited in the Philippines, or it is illegal because it violates the Constitution. Moving on to the second one, which is the indirect double taxation. It occurs when at least one of the secondary elements of double taxation is not common for both impositions. Meaning to say, there is a burden of two or more informations but is imposed by different taxing authorities, different purpose, and etc. A good example for this is the national government collects income tax from a taxpayer on his income, while the local government collects community tax upon the same income. The indirect double taxation is not legally objectionable, which means it is not against the Constitution. So instead, it is prevalent in practice. However, the direct double taxation is discoursed because it is oppressive or burdensome to taxpayers. So here is another illustrative case. After paying its local business tax liability to a certain city government, a cable television operator was billed by the said city for an adjustment. Dutifully, the cable operator paid the amount. Upon inquiry as to the nature of the adjustment, the taxpayer learned that it represents local franchise tax. Perhaps baffled by the imposition of both business tax and franchise tax, the cable operator wrote a letter of protest to the office of the city treasurer and requested for cancellation of the said adjustment and its corresponding refund. So, in this case, the cable operator requested for a refund because he was paying the tax twice, which are the local franchise tax and the tax liability, which is a local business tax. Double taxation is generally frowned upon in the Philippines by the state and taxpayer. The same is not entirely illegal if under a particular circumstances. Double taxation is violative of any constitutional limitation of the power to tax, since the tax was imposed as double on the same gross receipts by the same taxing authority. The situation of the cable operator argued that the imposition of both business tax and the franchise tax amounted to unjust and improper double taxation. So this is why he is requested for cancellation of the said adjustment and its corresponding refund. The cable operator also contended that since it is a legislative franchise, his only obligation shall be the franchise tax. When the protest was being denied and claimed for refund, the treasury officer justifies that business tax and franchise tax are separate and distinct taxes. They are in different nature and imposed under a different provisions under the local government code of the Philippines. What is the right answer for this? So when this case is appealed on the Supreme Court, the protest was being denied because the cable operator assumed that he already incurred the direct double taxation, when in fact he was not. So according to the Supreme Court, the two tax that was imposed to the cable operator are in different nature. The other is for franchise purpose, while the other is for local business tax. Although they are both local taxes, but the nature in itself, the business tax is for business, while the franchise tax is the tax on the privilege to have the franchise in the locality. So this imposition is the example of indirect double taxation. So let us move on with the sources of tax laws. The first one is the Constitution. The second one is the tax treaties and the convention with foreign countries. So example for this are those OFWs in other countries are exempted with certain taxes in return, with the foreigners here in the Philippines are exempted too. The third one is the tax code. So an example for this is the RA 8424 of the original National Internal Revenue Code and other tax code like Local Government Code and etc. So the fourth one is the presidential decrees. So these are the executive orders that were signed by the president. In addition, the presidential decrees were an innovation made by the late President Ferdinand E. Marcos with the proclamation of martial law. The fifth one is the executive orders. These are declared by the executive government to have that law related to taxes. The sixth one is the court decision. So this is the basis undisputed when it comes to tax laws. The seventh one is the statutes and laws. An example for this is the Create Law, Train Law, and other law that was enacted to revise the National Internal Revenue Code. The next one is the revenue regulations. So these are the regulations that are issued or were issued by the Bureau of Internal Revenues to clarify certain statutes or laws. The next one is the BIR rulings. So an example for this is the Revenue Memorandum Circular, Revenue Memorandum Orders, and etc. And the last one is the local tax ordinances. The same as the example of what I have shown, the local franchise tax, which is embedded with local government code and is imposed by the local authorities. So, let us now proceed on how can a double taxation be minimized. The impact of double taxation can be minimized by anyone or a combination of the following. A. Provision of tax exemption. So for this, only one tax law is allowed to apply to the tax object, while the other tax law exempts the same tax object. The next one is allowing foreign tax credit. For this, both tax laws of the domestic country and foreign country tax the tax object, but the tax payments made in the foreign tax law is deductible against the tax due of the domestic law. And the next one is allowing reciprocal tax treatment. So the provisions in tax laws imposing a reduced tax rates or even exemption if the country of the foreign taxpayers also gave the same treatment to a Filipino non-resident therein. And the last one is entering into treaties or bilateral agreements. So, the countries for this may stipulate for lower tax rates for the residents if they engage in transactions that are taxable by both of them.